Talk to me a little bit about the price here. It's an interesting deal in particular because the acquirer's sales are smaller than Broadcom's sales. Acquirer did $4.9 billion in sales. Broadcom did $8.4 billion last year. Is this a steal for Avago?
I don't know about that. I mean, like, Avago's sales are lower. Avago's multiple is higher, though, and the enterprise value of Avago is actually higher than Broadcom. So investors have been way willing to pay more for a unit of the revenue stream and the profit stream of Avago than they have been for Broadcom.
There's been so much consolidation in the semiconductor industry. Did Broadcom have to do a deal here, or did it really have a clear future as a standalone semi company?
No, I don't think Broadcom had to do a deal. I've been a big fan of Broadcom. They've done a ton of work over the last year or two in terms of rationalizing their portfolio, bringing their profit margins up, improving their cash flow and their cash return, and in general, putting a much larger focus on sort of value creation for shareholders. And they've had, since they got through this, I think they had a really good runway going forward to capture incremental value. And I think what Avago's doing here is if you're a Broadcom shareholder, you're actually getting rewarded for a lot of that sort of future potential right up front. And so I don't think Broadcom had to do this deal, but I think if this deal's on the table, this is a good thing for Broadcom.
Stacy, what's the next leg in this wave of consolidation we're seeing in the semiconductor industry? Is this enough of an incentive to force Intel to finally pay up for Altera, or are we going to see something different?
We could have a long conversation on what Intel might or might not be doing with Altera. In general, in the industry, though, we've been seeing, obviously, a lot of deals. We've been in a bit of a wave here. I think what's different now versus historically is a lot of these have been very large deals, and I think a lot of them have been very focused on scale and cost synergies rather than just blindly going after, growth or technology. And that may be one, sign of, look, semiconductors are not growing at 20% anymore, and, when industries start to get a little more mature, you start to see this sort of thing. And I think one reason it's driving some value now is, if you're betting on revenue synergies to drive a deal, that's always very uncertain versus if you think you can take out $750 million in cost,
Stacy,
you can probably take out $750 million in cost.
Jana wants Qualcomm to split into two companies, an IP company and a chip-making company. If Qualcomm doesn't opt for that path, and it doesn't look like it will, might Qualcomm become a consolidator in semis?
So I think a split for Qualcomm is a non-starter, and we can talk at length on why, but I don't think that happens. In terms of acquisitions, Qualcomm may need to do something, and they may need to do something transformative. The problem is there aren't that many companies out there that are big enough to move the needle for Qualcomm. NXP was one, and they're buying Freescale. Broadcom was potentially another. They're getting taken out. So there aren't that many other large deals out there that could move the needle. There are probably smaller ones that Qualcomm could do in a move for growth or technology, but they're not going to move the needle anytime soon.
Stacy, we thank you. Stacy Rasgon, senior analyst on Broadcom at Sanford Bernstein.